Hey guys, it's Matt here from the Bull Call, and today I want to go over what I'm seeing for the future here and why stocks are down today. So let's get right into it. I just updated my M1 Finance portfolio pie on my link tree down below. So if you want to take this pie and use it as your own, go right ahead. So right here, this is what you would see if you opened it up right now, and you can see there's 42 holdings right as of right now, a dividend of 0.1%. And an expense ratio of 0%, since these are all stocks, not mutual funds or ETFs. And this is exactly what you'd see. Obviously, there's a small number of gains, and the reason I'll show you right now, I'll go over each of these right now, and I'll show you the reason why it's not up is because of Rivian. And that's why it's only showing you maybe a few days as of right now, because of Rivian, because it's such a new company. It can't go further back than literally like a week, because that's how new Rivian is. But if you take out Rivian, a lot of these other companies are very, very solid companies and have been at least around for almost a year, other than Lucid. So let's take a look at all of these different slices that I have here. So EV holding at 25%, Cleantech 20%, Tech 15%, Metaverse 15%, Banks 10%, China 5%, Gaming and Sports Betting 3%, Food 3%, 2020 Losers 3%, and Space is 1%. So I will go through each of these really quickly. You guys can just skip ahead if you don't want to see any of this, but I'm just going to go through what I think is a nice, well-rounded future portfolio here. And this is pretty much like a buy and hold type portfolio, which I just invest roughly $25 almost every Monday into this account. So let's see. Obviously, I have Lucid, and if you haven't seen anything on my channel, you can just literally click on my channel right down below, and you'll see like every video is about Lucid. I'm a really big fan of Lucid, and right now, is it a great time to buy Lucid? No, and I said that just in my previous video, but I still think that buying and holding is one of the best strategies, and that's what I do with this portfolio compared to a trading portfolio. So Lucid here holding 40%, which is very nice. And I think Lucid and Tesla will dominate the market of the EV share. Also giving Rivian some credit here. GGPI, which is Polestar's merger, which is just a SPAC. It's just purely just there just to see what happens to the stock. I'm not really that bullish on it, but it's just there. We have GM, very solid company. It kind of it's just like a rock. It's sitting there, so it doesn't really... It'll grow, but I'm not expecting a lot of volatility out of it. And then we have NIO, obviously not doing the most fantastic this year. So that's the EV. It's very simple and basic. There's only 6, and it is a very basic EV portfolio. For me, technically, I think that Lucid should hold the most. But I mean, some other people are like, Lucid should only have 10%. And you know what? That's fine. You can do whatever you want. I'm just purely showing you what I think is the future. Now, a new one I added to the portfolio is Cleantech. Now, if you haven't seen anything about Cleantech, Plug Power, Enphase, and anything that's solar, it's a great investment for the long term, because I think Bill Gates and a few of the other billionaires have started putting money into these Cleantech solutions, and I think that it can really outperform the market here. And just a month, it's up 31%. A quarter, it's up 66%. A year, 90%. It was higher at one point. And 3 years, we're up 3,000%. So, and 5 years, 10,000%. So I think obviously that these have run up a little bit, and that's mostly because of Enphase, not Plug. Enphase. Enphase is up massively in the past few years. So obviously that accounts for a lot of the growth. But if we take a look at Plug, I think that's another great one. Plug and Enphase, they both do something with a lot of renewable energy, and I think that is the future here, guys. So if you're not in any of these clean tech plays, I highly recommend them, but obviously I'm not a financial advisor, so go do your due diligence and see what companies, what solar companies, any company you want to look at. Don't even take anyone else's word. Don't take my word. Don't take anyone's word except for a trusted financial advisor. If you guys are liking the video so far, a like on the video and a subscribe to the channel would help immensely. So let's get right back into the video. So let's go back here and look at the tech AI, and this one is pretty basic because of another category that I opened up, which is the metaverse. This one holds Microsoft, Google, Apple, Amazon, and C3 AI, which I will talk about more in a different video. But I really do like C3 AI, even though that they are down roughly 80% from their high. I think it's a great buy here at $30. Obviously, it's a well-rounded portfolio. Nothing really special here. These four tech giants not going anywhere. So that's a very solid tech portfolio. When you look at the metaverse here, Nvidia, an amazing company, going to be the next trillion-dollar company. Everyone's expecting it, but once it hits 1 trillion, I don't know where it can go from there. But it should be the next $1 company, trillion-dollar company. We'll see what happens from there. Matterport, another strong metaverse contender, and they are really strong in just kind of the virtual world. Same with Facebook. Obviously, they're changing their name to Metaverse, so that's a it's a great company for the VR AR type space. Roblox, another really strong one, even though to me Roblox is just a silly game that I played when I was young. It is a very strong company apparently, and they are heavily interested in the VR AR space. Unity, a very strong company for creating games in the virtual reality and augmented reality. And Autodesk is another one I just threw in there. I don't exactly remember what they do, but they do something with the metaverse. So let's go back to the portfolio here. And banks, this is going to be like the last one I'm going to go over, because the other ones are all pretty much basic and small and nominal since they're under 10%. You guys can go check them out if you want. But Square, another major fintech. PayPal, major fintech. Visa, Goldman Sachs, SoFi, all major players. I mean, I don't have to explain this, but these all are very strong plays that I think can outperform the market in the long term. Obviously, there's a massive fintech sell-off, so that's why it's looking pretty rough on the 1 week, 1 month, 1 quarter charts. But I think that, again, PayPal, just like C3AI, has a very good future. And I think that, yeah, it was overvalued during this year, and it went up almost, 100% or whatever it was, or a few 100% from where the lows were. I still think that PayPal, Square, all these names right here are very strong. Even though we're getting a sell-off, I still think that buying them into weakness is a very smart strategy here. So, I mean, that's pretty much it. You guys can go take a look at all the rest of these. I mean, it's only a few other ones if you really want to go take a look at those. And if you want to invest in this, you can. It's just another resource for you guys, just to take a look at what I have compared to what you have and that kind of stuff. So I'm going to pull up TradingView really quickly, because I want to show you guys what I'm seeing here on PayPal, and then we will go take a look at a few other companies here. So PayPal, what I did here is I showed what looks like to be like a undervalued, fairly valued, overvalued. And this is pretty much just based off support lines and how it kind of trended upwards. So on this line right here, it kind of trended up, and it kind of broke out, and it kind of bounced off of it. And this is a euphoric high, a nice double top here, signifying a massive sell-off, along with a death cross right here. So obviously, when you look at this, you're like, wow, it's a nice sell-off. Should I buy into weakness? I personally bought one share right around the $200 mark. Obviously, it's only one share. It's not much, but it's just increasing my exposure to PayPal, because I think they can have a nice rally after, very soon after this sell-off. So we are seeing a green candle here, but it did not overtake this one, so I don't see any bounce coming soon. It did bounce off this support level that I've created, which is about 184. That's a nice support level. And if we go back to these trends, we can see that the fair value would signify another drop to about 160. I don't think it'll hit that. I think it'll hit 174 before it starts rebounding up higher. This one looks like to me to be a very good contender for calls in the short term once it actually finds its bounce. But as of right now, I am laying off this one, buying into it a lot because of this selling pressure that it is having. So that's just my take on PayPal right now, and the whole fintech as a whole, because it really is a very strong company to own, and I've really liked it forever. It's just hard to own when it's on such selling pressure. But if you don't mind losing a few percent, but just seeing a lot more percentage gain in the future, PayPal is a way to go here. Another one I like is AI. Now, they are massively down from their highs, as you can see. They were at 100 and almost 82, and then now they're at $37. So they are massively down, but I'm slowly buying into weakness. I bought another 10 shares today, increasing my my portfolio, or my percentage of portfolio on this stock, because I really think it can outperform in the long term. And it's just it's down so much that I feel like it can't keep going. But I mean, I could totally be wrong, and there's an earnings day coming up really soon on the 1st of December, so we will see an insight into what is coming next, and that's really important with this company. I still think either way it's a long-term play. I'm not really too worried. I'm still down, obviously. I'm not down a massive percent. I started buying in at like, bought one share at 90. I bought a few more, bought a few more as it started going down. And I just bought the most amount of shares I ever had was today. So, you know, I bought 10 shares today, and it just increased my portfolio. So, you know, I mean, it's a smaller position. I mean, it's still it's a bigger holding in my portfolio, but I think in the short term, if it goes back up to $60, $70, $80, you're looking at almost over 100% return. So I think that this one has a lot of room to grow, and I think that this earnings, that they will finally show something of growth, and I think that we'll see some green candles after hours on this earnings. But who knows? We'll see. But yeah, I mean, that's pretty much it for this video, guys. I've been talking for about 11 minutes, and I will see you guys in the next video. So peace out.